Welcome back to Fast Market here on the TD Ameritrade Network. Let's bring in our next guest for our Cash Tag segment, and that's going to be Andy Swan, co-founder at Likefolio. Welcome back to the show, Andy.
Thank you.
All right, so we've got a home builders, home improvement theme going here today. Talking Lowe's after hitting on Home Depot in the first segment here, but Lowe's has been outperforming here. Andy, did you have data that's supporting this? Because it seems like in that duopoly type of business in home improvement that they'd kind of move in tandem, but we've seen some gains here out of Lowe's.
Yeah, gains out of Lowe's, I'm worried that they may not sustain. I think of the Lowe's outperformance of Home Depot here potentially as an opportunity to look at a bearish position on Lowe's, and there's really two reasons for that. First of all, when we look at Likefolio data, consumer demand data, those purchase intent mentions, we kind of get that classic setup that I know you guys love when we bring on the show, and that's the divergence opportunity. And that's when consumer demand, which is the green line, moves in the opposite direction significantly of the stock price. And that's what we have with Lowe's. We've seen a really sharp decline on a quarter-over-quarter basis for consumer demand at Lowe's. So this is just people talking about shopping at Lowe's or on the online Lowe's.com. And what it tells us is really that the consumer is really starting to get very tapped out here. We see it primarily come through when we look at it from a macro perspective on people talking about their credit cards being maxed out. Again, on that same quarter-over-quarter basis, we're seeing people talking about their credit cards getting maxed out at all-time highs and a really sharp spike over the last 30 days. So we think that from a consumer spending standpoint, and then you throw in, the housing slowdown, the number of transactions there just being basically a trickle, there's just not a lot of impetus for people to be going into Lowe's. And then even when they do have the idea of going in, they've not got that much money to spend. And so I think Lowe's is facing kind of a new situation. I'd be surprised if the company doesn't come out and further warn investors about the remainder of the year, because I do think the consumer is slowing down, and especially in home improvement.
Andy, your theme, and you're right, the charts you gave us today for Lowe's purchase intent, that's about as divergent as we see out of Likefolio. This is a big one in this case. And my discussion that I was having with Tom about Home Depot is home equity line of credits are spiking with rates. And that could also affect people's ability to redo their homes. If they're in a 3 and change mortgage and they look at an almost 10% line of equity, they're probably going to say, why would I want to do that? Maybe I'll just go to Europe for the summer. That's probably cheaper. But your data today, that's about as strong as I've seen out of you guys in terms of a diversion.
Yeah, and this is the time of year where you really don't want to see that if you're Lowe's or Home Depot. This is the time of year when people typically try to tackle those home improvement projects. They try to improve things around either the yard, the outdoor living area, or even some kitchen stuff. And we're just really not seeing that follow through over the last 30 days that we would have expected to see. Now, is 30 days enough to draw a conclusion for the remainder of the year? I think that remains to be seen. But with the stock having performed so well and so high at this point, I think that there's an argument to be made that the risk to the downside for the stock far outweighs the opportunity to the upside.
Andy, when you look at this one, we always talk about the duopoly, of this type of industry at this point. But when you look at Lowe's, it's got a little bit cheaper valuation, maybe warranted at this point. But when you look at happiness levels, you mentioned maybe Lowe's is overbought according to your data, but maybe Home Depot is oversold according to your data. I'm not sure. But when you look at happiness levels, it seems like a Home Depot, do they usually come out ahead of Lowe's?
Yeah, well, actually, I will say Lowe's has kind of taken that crown off of Home Depot over the last little bit. There's kind of a big switch there that we've talked about previously. I think Lowe's is doing a very good job with his online presence and with its in-store kind of feel, the vibe. People like the experience at Lowe's a little bit better than Home Depot, which feels a little bit more contractor friendly than consumer friendly. The other caveat I'll put on, an outright bearish call on Lowe's is that, we have talked to some industry experts, and both Lowe's and Home Depot are doing a very good job of squeezing their suppliers and getting more margin out of every product that leaves the store. And so that's always a risk factor that Likefolio can't see through. And that is, yes, maybe there are less people interested in going into Lowe's. Yes, maybe they have less money to spend, but if Lowe's is making more money on every item that leaves the store, that can more than make up for it. So we're not throwing complete red flags out there, but there's definitely something wrong with the consumer in the home improvement sector.
Yeah, lumber deflation, unfavorable weather were some of the issues that they cited on their last quarter here. But great data as usual, Andy. Appreciate it. Have a great day.
Thank you. You too.
All right, that's Andy Swan, co-founder